Welcome back. Today, we're going to tear apart a single day of trading that really tells a much, much bigger story. It's a tale of two markets, a day of deep divisions where the winners and losers were picked with, honestly, brutal efficiency. Let's get right into it. So, let's set the scene. The day was Thursday, October 30th, 2025. And yeah, it was just one day on the calendar, but it really felt like we were staring at two completely different economies at the exact same time. Now, if you just glanced at the headlines, the story seemed pretty simple. A down day across the board. The Dow was down just a little, the S&P 500 dropped about 1%. But then you look at the Nasdaq. The tech-heavy Nasdaq got absolutely hammered, falling more than 1.5%. Okay, so you see all that red and you think, uh-oh, bad day all around, right? Well, not so fast, because that is not the whole story, not even close. Hidden underneath these big, splashy numbers are two powerful and frankly conflicting stories that were really pulling the market in opposite directions. And that gets us to our first huge theme of the day, what I'm calling the Great AI Split. This wasn't a question of if AI is the future. Everyone agrees on that. No, this was a battle between companies that are making real profits from AI right now and those who are just promising they will, eventually. And I mean, check this out. This slide says it all. You've got two of the biggest names in tech. On the very same day, Meta Platforms absolutely cratered, down over 11%. At the same time, Alphabet, Google's parent company, climbed almost 2.5%. So how on earth does that happen? Well, it all boils down to one thing: proof versus promise. Meta came out and said it was going to borrow another $25 billion to spend even more on AI, and investors just got spooked. It felt way too much like they were just throwing money into another metaverse-style black hole. But Alphabet? They brought the receipts. Their cloud business grew by a whopping 34%, proving that their AI investments are already making them a ton of money. Investors picked a winner and a loser, right then and there. And look, this wasn't just some vague feeling in the market. The big analysts at Oppenheimer said it out loud. They said Meta's spending spree was giving them serious flashbacks to the metaverse disaster. They were so worried, they actually removed their price target on the stock completely. Now, that is a massive red flag on Wall Street. But this whole split personality thing? It wasn't just happening in the world of AI. The day's trading really exposed a much bigger gap, one that's running through the entire US economy. It's a tale of two completely different Americas happening at the exact same time. So there's a term for this: a K-shaped economy. Just picture the letter K. You've got one arm shooting up. That's the part of the economy that's doing great, just booming. But then you've got the other arm, and it's pointing down. That's the part that's struggling, getting left behind. And on this one day, we saw that K in crystal clear action. And boy, does this slide show you the two arms of that K. On the upper arm, you've got a company like Eli Lilly. Their stock jumped almost 4% because sales for their huge blockbuster drugs, Mounjaro and Zepbound, are just off the charts. But on that lower arm, you have Chipotle. The stock absolutely crashed, down 18%, after they had to cut their sales forecast for the third time. And the reason? They said their low-income customers just aren't coming in as much. And if you want to know why, you don't even have to guess. Chipotle's own CEO basically spelled it out for everyone in this pretty shocking statement. He said they're seeing the worst consumer sentiment in decades, and that lower-income families are just cutting back on everything. It's a huge warning sign that while some people are doing great, a lot of others are really, really struggling. Okay, so you've got a split in the AI world, you've got a split in the real economy. So what are you supposed to do with your money? How do you even begin to invest in a market this divided? Well, it looks like Wall Street is starting to map out three very different ways this could all play out. We can think of these as three different investment scenarios. The first one is basically betting that the proven AI winners just keep winning. The second is more of a defensive move, a rotation into safe, strong companies if the economy really does hit a soft patch. And the third is a bit different. It's a bet on the hidden infrastructure that powers AI, but it really depends on politics staying stable. So let's take that first scenario. The AI winner takes all. Here, you're betting on a company like Alphabet. The reason to buy is obvious. Their AI is already making them tons of money. You can see it right there in that 34% cloud growth. So when do you sell? The minute their spending starts to look like Meta's. Just huge amounts of cash going out the door without the profits to back it up.
All right, scenario two. This is your play it safe move. If you're getting nervous about the economy, about what the Fed's going to do next, maybe you rotate into a powerhouse like Eli Lilly. Its growth is all about the insane demand for its drugs, which doesn't really care about AI hype or whether the economy is up or down. The risk here, though, new competition or some kind of new regulation in that super hot weight loss drug market.
Now, this third scenario is a little more of a big brain play. It's a bet on the picks and shovels of the AI gold rush. I'm talking about the energy infrastructure you need to power all those new data centers. A company like Kinder Morgan, a pipeline operator, could do really well. But here's the huge catch. This whole strategy really depends on the current trade truce between the US and China holding up. If that deal falls apart, this play is in big trouble. Okay, that was a lot. A divided tech sector, a K-shaped economy, and three totally different ways to invest. So what's the bottom line here? Let's try to find some clarity in all of this chaos and boil it down to the most important takeaways. If you had to pull one piece of fantastic news out of this whole messy day, from me, it's this. The AI revolution is not just hype. It's real. And for the companies that get it right, it is wildly profitable. Alphabet's numbers are all the proof you need. The market is screaming that it will reward real, tangible results. But on the flip side, the single biggest negative is just as clear. That warning from Chipotle is a blinking red light on the dashboard. It tells us the K-shaped economy is getting deeper and more divided, and that weakness at the low end could absolutely drag the whole economy down with it. And if you're thinking, well, the Fed will just ride to the rescue and cut interest rates, you might want to think again. Fed Chair Jerome Powell basically poured a bucket of cold water on that idea, saying a rate cut in December is anything but a sure thing. And that just adds another layer of uncertainty for everybody. So as we look forward, there are really two huge risks, two big questions you've got to keep in the back of your mind. First, a policy error. Can the Fed really manage two different economies with just one tool, interest rates, without accidentally tipping us into a recession? And second, AI bubble trouble. This is crucial. If we see more and more companies spending like Meta but failing to get results like Google, this whole AI sector could be in for a very painful reality check. It truly is a tale of two markets. And the final chapter? Well, it hasn't been written yet.